Hi, so this is the second part of ways to build, improve, and repair your credit. Now, yesterday, as you know, I talked about credit utilization, I talked about debt to income ratio, I also talked about the electoral roll, I talked about reviewing your credit, and I suggested check my file, and also I talked about paying your bills on time. Today, I'm also going to talk about ways that will have a high impact for you, but it's going to be another different five that I'm going to talk about. So, as I said, my name is Manda. I'm the mortgage coach. The reason I call myself that is because I'm a mortgage advisor and I'm a financial coach. And I've helped hundreds of people improve their credit, learn about mortgages and money matters in order to get themselves on the property ladder. So, let's get started. So the first tip is build a credit history. Now, if you've got no credit at all, then you will really struggle when you're trying to apply for a mortgage. I mean, I've had a lot of first time buyers come to me and they've been saving up their deposit for how many months, years, but they've never had a credit card, they've never had a loan, they haven't even got an overdraft. Now, banks will be very, very nervous about lending money to someone that has never had to manage credit at all whatsoever. Even if you get a credit card, I had one client and she was really, really nervous about getting that credit card. So what I suggested was she applied for the credit card, then she pays her Netflix on it, and then she cut the credit card up. Now, you think that's a bit weird, but she literally didn't want credit. But by having the credit card, even though she didn't physically have it, so she couldn't spend it, that credit card number had been attached to her Netflix account. So every single month, it would get it it would get charged the Netflix amount. She'd also set up her direct debit to pay it off in full. That's what Martin Lewis likes to say, in full. He's right. And that way, every single month, it got charged, it got paid off, and she built up her credit that way. So she didn't actually have to carry around a credit card. She didn't have to worry about being tempted or whatever reason she didn't want to have the credit card for. It still worked. She was able to do this for a few months and it did build up her credit. The next thing is avoid multiple credit applications. So it does surprise me now, but if you don't know what you don't know. Now, I've had clients that have come to me and they're like, I'm saving up a deposit. What do I need to do? And I give them all the tips and they go away and they go off and they look for a property. And then 6 months later, they've now saved up more deposit. They've found that property. They come to me and I ask for their credit report because I always ask for that. We run through it and they got a car on HP a couple of months ago, which tanks their credit and it reduces the amount that they can actually apply for. So it's all very well getting that car, but you could wait till after you've got the mortgage because it does affect it. And when you're looking at affordability, and I've got a video on this as well, if you've got 10k out on your loan for the car, it's not just 10k, it's the multiples. So for example, if you're on 25,000 and you've got 10k out on the car, they will take the 10k off the 25,000 and then it's 15,000 that they will say, okay, we'll give you multiples of 4 times your salary or 5 times your salary. But it's based on 4 or 5 times that 15,000 because they've taken the 10 off up front, not the other way round. It's not a case of 4 or 5 times the 25 and then they just take the 10 off. A lot of lenders don't do it like that. So I would always say don't apply for any credit up front. If you're applying for a credit card, don't make 3 or 4 applications because you find one with a better interest rate or something like that. Do the research first before you make any credit applications. And then if you're trying to improve your credit, for example, and you do the example I had last time about having a credit card, just get one. Just get one. The next thing is keep your old accounts open. So like, for example, with myself, I've got an account where it's my graduate's account. So first, when I started at university, I opened this bank account. So it's my undergraduate's account. And then they when I graduated, they changed the status to a graduate's account. That's actually who I got my first mortgage with, because I'd had 4 years history of having that account open. I've still got it open now. I don't really use it, but it's good when people look at you and they say, okay, how long has your bank account been open? They love, love, love if you've got history. And when I could say, oh, it's been open at least 20 years, I'm showing my age, but it really does sort of make them feel happy. If you literally have, it's like having no credit history, having a bank account that's newly open and not having any old ones. By all means, if you find a bank account that's offering a better interest, better deals, open it, but keep that old one. Keep that old one. I wouldn't say have loads of bank accounts, current accounts, but even if you've got two, it's definitely worth having the history of the old one. The next one is, like I said before, review the credits, your credit reports regularly, but also make sure that those mistakes are corrected. So while you're reviewing it, don't just review it for the fun of it. Actually look at it. If there's any mistakes, ask for the notification of change, ask the agencies, ask Check My File if you've done it through Check My File. And by asking Check My File and the individual agencies, and then also if it's a mistake, for example with Barclays, like Barclays credit card, just for an example, then go to them as well. Or if it's a mistake with a store card, go to the store card. Just go to the store and get it resolved directly as well. And if you actually argue your case over sort of 2 or 3 different sources, then it will be quicker at getting resolved. And then the last one I'll be talking about tonight is use a mix of credit types. So you've got credit cards, you've got personal loans, they all have a positive impact. So if you're trying to build up your credit, you could get out a small loan, you could get out your a credit card, and make sure those are being paid off on a regular basis. The only thing they don't really like is hire purchase and car loans and things like that. But if you had a personal loan from a while ago and you're paying that off, that is a really good way of showing that you can manage credit. But also just consider obviously not having a massive personal loan, because as I said, that will affect your affordability. But if you've got a small one, and you've also got a small credit card limit, then those are good ways of building up your credit. So it's all about managing credit. So you don't go wild and get massive amount of credit, but then you don't have zero amount of credit either. There's a balance, and they want to know that you can manage your credit. I hope this has been useful. Please subscribe and share, and if you think anyone else would get use out of this, that'd be great. And if you've got any comments or you've got any anything that you want to know more, please let me know. Take care. Bye bye.